Hello, everyone. Thank you so much for tuning into another episode of the Velocity Channel. Again, we are here with Anthony from First Savings Bank. Let me tell you
What's up, guys?
something.
How's everybody doing?
It's so amazing to have this man on because what you know of velocity banking, right? You've seen me. However, have you seen a professional with velocity banking? The bankers that I've talked to seemed either they didn't know about velocity banking or they were scared to talk about it, right?
Yep.
And so you and I both know how relieving it can be when someone shows you the truth or the reality about how to really do your finances, really allocate your finances, right? And if you take apart that word allocate, it basically means location. Right. And that's
Right.
what we're going to be talking about and illustrating right now. We're going to be talking about HELOC and infinite banking, right? HELOC and infinite banking. And so, without further ado, what I want you to do is I want you to like, I want you to share, I want you to subscribe because your friends need to know, your community needs to know, your family needs to know about how there are more options out there than what we've been told by traditional banking systems. And Anthony, from what I know about you, man, you're far from traditional, you know? I mean,
I'm
there's,
far from traditional, CJ. I'm
you
far, and
know?
maybe in more ways than we know. But in terms of the banking industry, I don't think there would be many people that would disagree with that. I could be wrong. I've been wrong before, but no, I 100%. So I mean, one thing that we do here, and one thing that I like to do is learn about and understand different ways that people are using different vehicles. That's what velocity banking is, right? A first lien HELOC is a HELOC, right? And yeah, it's in the first lien position, but that just means that if the person defaults, that loan gets paid off first, right? And that's really all that means. So a HELOC itself, the whole idea of a first lien HELOC isn't that far out. It's actually really common. But the way that we teach people how to use it, what we do is we take this vehicle, we teach people how to leverage how it works, right? And the reality is there are multiple financial vehicles out there, first lien HELOC being one. There's a way to leverage the way an amortized mortgage works. It just doesn't work very well, right? But there are multiple vehicles, multiple financial vehicles out there, right? You have life insurance policies. An HSA is one that's really, really strong and very, very good, right? You have investment accounts. You've got, so there are different types of financial vehicles, brokerage accounts that are available to people, and they all follow a certain set of rules, certain set of guidelines. And there are people out there who continually try and understand how these particular financial vehicles work so well. They want to know the rules so well, where it's like, hey, look, where is there a little place where there's like a loophole, right? Where I can use this structure to my advantage that may be different than how everyone else uses it, right? How can I take this and leverage and take advantage of how this works, right? To achieve a goal that's a whole lot better than what I would otherwise, just because I know how this works so well. And that's kind of what we're going to talk about today. We've talked a lot about velocity banking and leveraging the rules of a first lien HELOC. And that's what we do, right? And that we'll continue to do that day in, day out, and day in, day out, because that's what we're about. There are other things out there that I think are good to know about. And so being in this type of I guess world, we want to call it, or being in around enough people that have this type of mindset, I'm sure you do too. I'm really lucky that I get to learn from and meet and learn about what other people do with other financial vehicles. So that's kind of what we're going to talk about today. Is there's another financial vehicle that people use a little bit different than everyone else uses it. They leverage the rules. They work within the rules of what's allowable, right? So everything's totally fine, but they leverage it a little bit differently and take advantage of the rules to get amazing, amazing results in ways that other people don't. And the cool thing is, the one that we're going to talk about today is it's a way to leverage the rules of a whole life insurance policy. And the term that people use is called infinite banking, right? So we've got velocity banking. Theirs is this other is called infinite banking. So I don't want to confuse the two, right? When we're talking about infinite banking, that talks about you have a whole life insurance policy. And we're going to leverage the rules of what's allowable with the whole life insurance policy to get exponential gain, exponential growth. And so today we're going to talk a little bit about that. And then we're going to talk about how people leverage a first-lien HELOC with a whole life insurance policy. So it's really, really cool. It's kind of a niche of a niche, right? Because we've got this kind of, this idea that we know isn't that alternative, but most people haven't heard of it. Velocity banking with the first-lien HELOC. We've got that idea, right? And then we've got this other idea of infinite banking, which uses a life insurance policy in a little different way, right? And we're going to merge the two. So this is even, you've got specialists over here, you've got specialists over here. We're your velocity banking specialists. You've got people who specialize in infinite banking as well. I don't specialize in that, right? But I have worked with a few people, enough people so far to understand the general structure with what it is, right? Just to give you guys an idea about what it is and how it works and how people leverage that particular vehicle. And I also know how you can leverage the two. So I wanted to share that with you guys because this can be an extremely powerful tool. And when you use the two in the right way, it's so much better than just doing one, right? But you have to understand how it works. You got to work with someone that understands how the two get leveraged together. But when you do it, what we found, and it's been proven mathematically, that when you leverage the two together, it has an end result that is better than just doing one by itself. So I'm excited to share this with you guys because I've been able to see it and learn from others who are experts in infinite banking, and together we've figured this out. So I just want to give a general introduction today for what it is, what infinite banking is, the general concept. You infinite banking guys and gurus, if I'm wrong, I want you to hop on and call me out for real, because I don't want to be spouting off misinformation here. So I don't mind if you do that because I'm not an expert in that, right? But if it's right, feel free to chime in and say, hey, look, this is the general thing. Here's some things that are a little bit different, right? But all in all, I want to introduce this to the network here and to the listeners here, in case this is a new concept, the infinite banking concept, and then the fact that you can leverage it with a first-lien HELOC too. So what I'll do is I'll flip to this sort of, I guess, presentation that I've got and get started with that, just to kind of help introduce this whole idea. How's that sound, CJ?
That sounds great, man. Hey,
Awesome.
go ahead and do it.
Awesome. Okay, let me share my screen real quick, and then we'll get right to it. So today we're going to be talking about using velocity banking with infinite banking. How do we leverage our understanding of velocity banking with a first-lien HELOC with the infinite banking concept? The first thing, I don't really worry about this usually when I'm talking about velocity banking and first-lien HELOC stuff, because I feel like I know it well enough and I can speak to it. But I got to throw up this disclaimer right today. So just bear with me while I read it, because I got to say it. Now we're getting into insurance stuff and investment and advice and stuff. So we're not financial advisors. This content on this website and this YouTube video, for our YouTube videos, are for educational purposes only and merely cite our own personal opinions. In order to make the best financial decision that suits your needs, you must conduct your own research and seek the advice of a licensed financial advisor if necessary, or the advice of a licensed insurance agent, who I will even go further to say specializes in infinite banking concepts. Know that all investments involve some form of risk. There's no guarantee that you'll be successful in making, saving, or investing money, nor is there any guarantee that you won't experience any loss when investing. Always remember to make smart decisions and do your own research. So I always think it's funny when people say that, but to be honest, I thought today, because I'm talking a little bit outside of my wheelhouse, it would be good to do that, because the more you get into the financial advice sector, the more you got to let people know, look, this is a concept, this is for education. So I appreciate you guys bearing with me for that. Let's get to the meat of it. So the first thing we want to think about and understand is like this infinite banking thing, right? Because before we can understand how to leverage the two, we have to understand the general idea of this, right? So here is what the infinite banking concept in general is. The first thing you do is you fund a whole life insurance policy. Now, whole life insurance policy is a really amazing tool. It ends up creating a lifetime, a long-term cash value and a death benefit and other benefits as well, depending on the policy that you get, right? So unlike a term life insurance policy where you pay monthly, and then if you pass away, your family gets money, a whole life insurance policy is basically built by the money that you put into it, from what I understand, right? As compared to you pay $60 a month or $120 a month, and then you get 500,000 at the end. The amount that's there is a lot of times the amount that you put in, with other benefits that come along with it when you pass. Now, it's also a great vehicle as well, because the money that you put in there is extremely safe, meaning, people call this, it's like you use that to become your own bank. So very wealthy individuals, corporations, institutions use this particular type of vehicle to store funds in an extremely safe place that's really hard, if not impossible, for other people or other institutions or the government to touch. So that's one reason why they do this, because it's a very protected place. That's my understanding of it. So there's that protection piece, right? And a lot of times it just goes that far, right? Just like with a HELOC, you get a HELOC, you get a balance, and you pay the interest, and you throw some money at it when you can, right? That's about as far as that. Well, it can go a lot deeper, just like velocity banking can too, right? So you fund this whole life insurance policy. A lot of times it's tough for people to do that because the premiums for these are pretty expensive. We're talking $10, $20, $30, $40,000 a year, right? Which is a lot of money, right? So a lot of times that's why people choose term life insurance instead. And this may or may not be an option for everyone. It may be, there's the cash piece, there's your health, there's, I don't know if age I don't know the factors, but there, are you a smoker? That kind of stuff, right? Those kind of questions that you get when you're doing insurance, right? It may be harder to qualify. It may not be hard to qualify for a life insurance policy, but generally speaking, people pass on this option because it costs so much money up front, right? You have to have a lot of cash to fund it. And so a lot of times people choose term instead. But in terms of if you already have a whole life insurance policy, or if you are a high net worth or high cash flow individual, then this could be a really great option. And there may be other ways to get into it as well. So anyway, that's you fund this whole life insurance policy. And when you do that, it creates a cash value of the policy, right? So if you put in $100,000, they call it the cash value of that policy is $100,000, right? And that $100,000 generates interest. Okay, it makes money because it's actually the insurance company takes it and invests it, which creates income from the money that you're saving there. So not only are you creating this life insurance policy, but the fact that the money's sitting there, the fact that you've created this cash value, that full cash value generates interest while you keep it in there, right? Well, the cool thing is you can borrow up to, and here's the thing, this number 80%, you can't trust that. I know it's on the page. I don't know if it's 80% or not. It depends on the policy. Some policies, from what I understand, you can borrow up to 80% of this cash value from the insurance company. Here's the thing though, you're not borrowing from the cash value. So the cash value still stays at the full cash value and still generates interest using the full cash value. You borrow from the insurance company, but the amount that they'll let you borrow is 80% of your cash value, right? So the full amount of your cash value still generates interest, but then you borrow from the insurance company, which means essentially the money's liquid. You do pay interest to borrow that money, but if you have the right policy, the amount that you pay to borrow that money is less than what the full amount is making, right? Now we're getting kind of in the weeds. I haven't spent a lot of time explaining this. I don't explain this every single day like I do with Boston Banking. So if I'm above you, it just means I haven't spent a lot of time trying to explain this to people.
No, this actually magnetized me in, and I know it's magnetizing the viewers in as well, man. When you explain that 80% of the cash value, that's perfect. Good job.
So the full cash value is still generating interest, even when you're borrowing from, and that word policy is not right. You're not borrowing from your policy. You're borrowing from the insurance company. You're borrowing from their coffers, right? Because your full cash value is still there, right? So now you have 80% of what you put in. You can use those funds to buy income producing assets. So the reason why you do this is a couple reasons. One is to create a whole life insurance policy creates it's like a vault. It's like a vault of protection for your money, right? For one. For two, it's liquid. And another reason why you pull it out is because the full amount of your cash value generates interest. And then you pull kind of those same dollars and use them over here, right? So what this allows for you to use the same dollars twice to generate income for you, which maximizes the benefit of the money that you have. It's kind of like fractional lending that banks have. So you guys may know this. For every dollar that banks have, they can lend out $10. So if they have $1 million on their balance sheet, they can lend out $1 million. They can lend out $10 million. And so this is one way consumers can do something very similar, right? You invest your money with your whole life insurance policy. You borrow money here. This still makes money, and you make money with the same dollars over here. That's the whole idea of the infinite banking concept. If you want to know more, I am not your guy because I don't know enough about it to tell you more, but I can help you find someone that does. Or if you want to just look up infinite banking, CJ, I don't know if you have friends that know about this too.
I got 3 words for you. Denzel Napoleon Rodriguez.
Yes.
You know, I'm going to give him a shout out. Denzel Rodriguez.
Denzel Rodriguez. Don't call me.
Banking. Oh,
don't
my
call
word.
me. Call Denzel. That dude, I cannot believe I didn't even think. That guy is, we got to have him on here. That he is the jam. He knows infinite banking backwards and forwards. And he's not only knows the concept, he's done an extreme amount of research on which policy is the best policy for which purpose. And like, if you want to talk about someone who A, is extremely knowledgeable, but B, really cares about the people that he works for, and that's the way that he sees it. He works for you. He is your fiduciary. We were talking about fiduciaries earlier. He is your fiduciary. He's looking out for your absolute best interest. 100%. 100%. We got to get him on here.
Oh, yeah, we do, man. You're
right.
Okay.
So, man, how did I miss that, CJ?
It's all good, man.
I'm gonna be in influencer purgatory after that one.
No, it's all good, man.
I'm glad you brought that up, man. That's awesome. That's cool. All right. Yeah. So this is the general concept of infinite banking. Well, here's the thing. You can use the First-Lien HELOC and the velocity banking concept and leverage it with infinite banking. And there are 2 general structures that you can use. The first one is a 2-step structure, right? So the first one you have to fund your premium, right? So we're already assuming we know what velocity banking is, right? You got your HELOC, you're driving your money, your income into it, you're using it to pay your bills, you have surplus at the end of the month, and because you have surplus, that pays down your principal balance each month, and you're aggressively paying down the balance of your home. I'm assuming that today the listeners know that so far. So if that is still a new concept to you, then I may be speaking above you just a little bit. But if you do, then if you don't, it's actually not the end of the world, because you don't have to know that. But you're using velocity banking with a first-lien HELOC. We know that's good. We're going to assume that's good right now, right? So with velocity banking, you drive down your balance in your HELOC, which means now you have access to available equity, which means that's money you can pull out from your HELOC. So what you do is you pull money out from your HELOC to fund your whole life insurance policy. Well, remember earlier, we were talking about one of the main barriers, which is the reason why people don't think about or use a whole life insurance policy, is because it's so dang expensive to fund. Well, guess what? If you have $100,000 in equity in your home, and you get a policy that, you max fund it for $10,000 a month, you pull 10 grand out of your HELOC, which you have $100,000 equity, you pull 10 grand out. Well, now you owe 90,000. Now you have $90,000 in equity, right? So it gives you the ability to leverage more capital, more cash, right, to enter into things like a whole life insurance policy, where before maybe term was the only option because you didn't have enough cash stored up to do this, right? Well, now your life insurance policy is funded, and we would, if we were just regular people and didn't know about infinite banking, we'd keep our money in the life insurance policy, right? And it would be stuck there, and it's not liquid, and we'd be getting a whole life insurance policy, but that would be it, right? Well, there's another way to treat this, right? Which is that we know with infinite banking, you can pull money from the life insurance company, right? Up to 80% of the amount that you put in, right? So that's what you do. You pull out 80% of that cash value. That cash value, that full cash value, still generates income, right? And you put it back into your HELOC, which then completes the cycle of velocity banking. Now, it's true, it's not as efficient than if you just kept all of your money in the HELOC, right? Because 20% of the money that you put into the life insurance policy to fund it, you can't put back in the HELOC. It has to stay there, right? But 80% of that comes back into the HELOC, decreasing your balance, which brings you pretty close to where you were. And what we found is that when you leverage these two, it does slow the payoff of your first-lien HELOC a little bit, but it doesn't really do that much, right? So what you give up is not that big of a deal to create this amazing vehicle that can also be a life changer. And so knowing that, you give up a little bit to get a lot, to me, it's better to have both when you do it right. So all in all, it makes it easier to fund the whole life insurance policy initially, because you don't have to come out of pocket to fund the life insurance policy. It comes from your HELOC, right? Second is it maintains a lower balance on the HELOC for interest savings and debt pay down, compared to if you just used the HELOC to fund it and you didn't bring the money back into it, right? Because if all you did was fund the life insurance policy and you didn't take advantage of infinite banking, right? Your money is in the whole life insurance policy, which now that gives you a big hit on your HELOC and your payoff time, right? So it maintains a lower balance in the HELOC because you bring the money back into it, right? It allows, you're kind of able to recycle the dollars that you bring back to your HELOC. So you can use a lot of the same dollars that you used, if you think about it like that, right? You put money in the life insurance policy, you bring it back to the HELOC. Well, you can use some of those same dollars to fund the next year, right? So it sort of recycles those dollars to help you create this whole life insurance policy.
Wow.
And it provides a pathway for you to accomplish and achieve the benefits of both infinite banking and velocity banking. And that to me is a really, really powerful thing. We know velocity banking is awesome. I know infinite banking is great. And that's something else that, that to be understood and learned and bought into and believed and owned, right? I know that's true. And so what it allows for you to do is, if you believe that both are amazing, this allows for you to leverage both and achieve both, which is great. So that's one of the structures. And this is it's a back and forth. It's just two different moves that you make. I wouldn't call this completely leveraging infinite banking, right? This is more how to best fund a life insurance policy while doing velocity banking, right? The other way adds a step. Now this hopefully is not complicated. It adds one step, so it's one layer of complexity. But this next way of structuring or leveraging the two uses both strategies to their maximum benefit. So this is really pretty cool. So this one involves actual infinite banking, right? Which, if you remember, you take from your life insurance policy and you invest in something that generates income, right? So you're using your life insurance policy to generate income, and then you're using the same dollars to invest somewhere else to generate profit. So this structure starts the same. You use your HELOC to fund your life insurance policy. Same deal. You pull from your HELOC, fund your life insurance policy. What that does is that that allows for you to create this cash value, right? The next thing you do is you pull 80% of the cash value, like we talked about, right, to invest in an income producing asset, right? So now at this point, your life insurance policy, the full cash value is generating income, at interest income, and then you pull money from the insurance company, and buy an income producing asset, right? Which then creates income, right? Well, then what you do is the profit that you receive from that interest income, or from the income from that investment, you take and put right back into the HELOC. So it creates this cycle that allows for you to use your dollars twice. It pays down the HELOC balance for velocity banking, and you create this life insurance policy that makes it easy to get. So for this, it's easier to fund your whole life insurance policy because you can use the equity in your home that's already there. It accomplishes the value adds for both infinite banking and velocity banking, where before it was more just value add for velocity banking to create a life insurance policy. This is actual infinite banking and velocity banking at the same time, right? You're able to store your profit in a place that works for you while it's being stored, the First-Lien HELOC, right? If you take that profit and put it in a savings account, we talk about this, a savings account doesn't do anything for you while it sits there, right? So you take the profit from your investment, if it's a flip, right? You pull from the life insurance policy, you buy your flip home, you fund the rehab, you sell, you take the profit, the principal, and you take the interest or the profit from the sale of that flip, and put all that back in the First-Lien HELOC, which reduces your balance even more, right? Helps you fund the policy again, use the policy again to then buy the next investment property or buy the next income producing asset. It accomplishes the debt pay down and the interest savings of velocity banking, and the use of the same dollars multiple times for the infinite banking concept. And the overall outcome is better. You have to sacrifice a little bit of time and interest cost on the velocity banking approach. And we teach the velocity banking strategy like it is the law, right?
Yes.
You don't give up interest dollars. You don't give up interest cents. It is as efficient as possible, and that's it. We teach it that way because it's important that people know the absolute best way to treat this. If you want to know it, we'll teach you the absolute best way to treat this. That doesn't mean that there aren't reasons why we would sacrifice a little bit of that if there's a much better gain somewhere else, right? So we teach the ideal strategy because that's what people need to know to be able to understand what it is, right? this is a good example of a time when the numbers work, that it would make sense to sacrifice a little bit in terms of your debt payoff time, right? To pay a little bit more in interest costs, to be able to create this other structure and investment where other dollars are working for you 2 times, the same dollars working for you twice, right? And then you take the profit and dump it back in your first-lien HELOC. That overall outcome is better than only doing one at a time, right? Or if you just did your life insurance policy and did infinite banking, right? And you fund and you go back and forth, introducing velocity banking to that concept, the overall outcome is better than if you just did those by themselves as well. And so those, I always knew that was true. I always knew it was true. There are people that have proven it with mathematics as well, which made me happy because now I can get on here and say that I actually have seen it. Does that make sense?
Yes.
So that makes me a whole lot more confident instead of just being the dreamer where it's like, oh, there's got to be a way. Like it does. It's better. So that's the whole concept. And so that's one thing. Again, like I feel really, really lucky and I'm grateful for the experiences I've been able to have and the people I've been able to meet. You know, when you're in a space that is a little bit we'll call it alternative, right? You meet other people who are in a space that's alternative too. This is kind of one of those, right? But the cool thing is, all it is again, I feel like a science teacher or something, or like a programming teacher, but it's like each of these have their own set of rules that you can work within. And there's a general purpose for why the whole life insurance policy or first-lien HELOC was built, right? But there have been some really smart people that have come before us who figured out, who we've been able to learn from, how do we take that set of rules and like maximize the complete benefit. And they got this little place here and this place here. We're going to take these two, we're going to put them together, and we're going to push it out, and it's going to get a much better outcome than we would have gotten had we just followed the rules so had we just treated this the same way that everyone treats it, right?
Right.
And so it's really neat to have been around and learned from people who do understand these different financial concepts, because all it means is that we get to provide more value to people. We get to help improve more people's lives. We get to help people make amazing, great decisions that are going to help them bring their life to a better place financially. Excuse me. So that's really, what I'm really grateful for. And that's why I was excited to share this idea, because in this concept, because it's real and it works. Obviously this is an eagle-eye perspective of what this could be. Again, I'm not an insurance agent. I don't specialize in infinite banking. But I've been able to learn from people that do. Denzel Rodriguez, Denzel Rodriguez. Denzel, I'll say his name as many times as he knows this. He knows this really well, right? And he's a really good example of someone that specializes in this. He does know the velocity banking piece too. But he really, really hones in on the infinite banking side of things, and is a really very smart person. He knows his stuff and he cares about people too. So, so anyway, that's it. I mean, that in terms of my understanding of it and what I can bring to the table, the goal was really to share another part of what this could be for people, right? I'm not advising you should do this, right? Just like I wouldn't advise, I wouldn't say you should use your first-lien HELOC to pay off your house and invest, right? Some people just want to use velocity banking to become debt-free. I'm totally cool with that. That's an awesome, amazing outcome, right?
Yes.
That's an amazing goal. If your goal is to pay off your house and you want to do it faster than anything else, pay it off. The reason why I bring up the investment piece is because I want people to know and understand what else is out there, right? And that other people use this tool in this certain way. Same thing with this, right? I'm not, I have no vested interest in someone choosing a life insurance policy, a whole life insurance policy, or doing infinite banking. For me, it's just, I was blown away when I found this. I was like, I've got to share this concept because it is powerful. It's amazing. It's just that it may not be for everyone. It may not work for everyone, right?
Mhm.
But I just thought it was important to share this whole idea and let people know it may seem complex, but this is a type of structure that a lot of your really wealthy and sophisticated financial individuals are using and utilizing to maximize their benefit and get ahead. So I just thought it was important to sort of put it out there and share it.
Absolutely, man. The whole life insurance policy, index universal life, permanent life insurance, different people have different names. And of course, sometimes the products are different as well. I do know that life insurance, what do they do? Just asking the audience, what do they do when you decide to pay annually? How about semi-annually? Many times you'll see that they give you a discount. And
Hmm.
when you have a first lien HELOC, right? And you have all this equity, you can use the equity. Guess what? You can save money on your whole, or possibly save money on your whole life insurance policy. Of course, you're going to have to go ahead and look at that policy. Remember, what's that saying, Anthony? The big print giveth, but the
Yep.
small print taketh away. So, of
That's
course, not
right. That's
all
right.
life insurance policies are the same, right? But look into it, okay?
Yeah.
And remember that discount. So now that's even more cash flow. When you get that discount going, you can put inside of investments that you can put inside of the different assets that'll make you money, right?
Absolutely.
Anthony, I think you did an excellent job, man. I
Thank
mean,
you.
I got excited when you started talking about you started making the clarity, right? It was very clear that you're borrowing from the insurance company. Because I know a lot of people say they policy loans, right? Well, hey, you're borrowing from the insurance company, not the policy. And even
Right.
though it may be called, policy loans on some, we do need to make that. So that was perfect, man. Thank you so
Thank
much
you.
for clearing that up. That was
Yeah, absolutely.
amazing. Yeah, yeah. And you know what? You also, from the very beginning, you taught us what's necessary many times in making a video, and that is sometimes disclaimers, right? So you put it up, you read it,
Yep.
and that's an example, whether you knew that or not. So that's very professional of you, man. Thank you,
Oh,
thank you,
thanks.
thank you.
I got to step it up. I had to step it up today. Um, when
Yes.
you're going outside your wheelhouse, you're not really sure. It's like, look, I'm just going to put it up there, and it's one of those necessary things sometimes,
Uh-huh.
and it's just when you're working in the financial sector, what can happen is people can take your opinion or your education or your perspective, right,
Mhm.
as financial advice. And I understand that, right? Because there are certain things that I would say I understand really well, right?
Mhm.
Maybe an expert, whatever you want to call it, right? Um, but and there are things that I'm not, right? And there are places that I don't have the credentials for
Mhm.
one, and that's a legal thing, right? I mean, there are a bunch of people with credentials out there that I wouldn't, you know, trust,
Right.
right? But I also like that's one thing. And from a legal standpoint, that's important, right? But like from an actual like advice standpoint, I don't want anyone to misconstrue the purpose of me bringing this up, right?
Mhm.
And the purpose is to introduce a concept that I've learned about, that I'm excited about, that I've seen work with people, right? But I'm not an expert in, right? And I don't have the deep knowledge base to be able to go any deeper than this, right? Um, and like I said before, you IBC guys, like if this is wrong, I want you to hop on. I want you to call me out, right? Because because it's important that people get the best information, right? It's important that people get legitimate information. And if any of this, which is not my wheelhouse, is outside of the scope or completely wrong, or, you know, bringing people the wrong way, like, put it on there. I want it. We want it, because this is not about driving people in our direction that we need, right? This is about solid, legitimate, transparent information and education for people to be able to make the best decisions for themselves. So I just want to put it out there. If that's the case, like, you know, just hop on and say, hey, here's how it works. One thing I do know, I've used the term whole life insurance policy. There are a whole life insurance policy, from what I understand, is like this umbrella over multiple different structures of whole life, right? There's this ongoing debate between an IUL policy or a whole life insurance policy, and which one's better, right? So the IUL stands for something that I can't remember.
Index Universal Life.
Index Universal Life. Thank you. Right. And that the way that it functions in terms of interest generation, right? From what I understand, Index Universal Life policies, they generate interest when the market goes up, but when the market goes down, they stay here, right? Whole life insurance policies go up when the market goes up, and then they lose money when the market goes down. I don't know what the difference is between the two, right? So obviously your IUL guys think IULs are better, and your whole life insurance policy guys think they're the same. That is a debate between the same product, if that makes sense, for this purpose, right? And so if I've used IUL, if I've used the term whole life insurance this whole time, and you IUL guys don't like that, I'm sorry that I didn't use the term IUL instead, right? Because both of those, for this purpose, are to me, right, for the purpose of this general explanation, they're synonymous, right? Regardless of how the life insurance policy, it generates its interest or doesn't, whether when it does, when the market goes up or down, doesn't change this structure that we have here. So for all you IUL guys, if I didn't prop you guys enough, like an IUL is a great one to use for this strategy too, just for anyone that's out there.
Oh yeah, absolutely, man. Yeah,
So
and
anyway,
we know about the floor as well. We know about the ceiling.
You got the floor, you got the ceiling.
Are you well, guys?
You
Hey,
go
we
below
love
the
you too.
floor. Yeah. So again, anyone who's watching this, if you want to get answers about IUL versus whole life insurance policy versus IBC outside of velocity banking, Denzel Rodriguez is your guy.
Oh yeah. So guess what? Stay tuned, guys. Stay tuned. He actually contacted me the other day after I contacted him. Yeah, so
let's get him on. No, for real.
Anthony. Oh yeah, man.
Look,
Absolutely.
we should both bombard him, because I mean, he's tough to catch, but I can get him every once in a while. And I think you're probably the same. So if he just reached out to you, you've got it, and you have a recent deal. I haven't. It's probably been a month since I chatted with him. So let's see if we can get him to hop on. I think it'd be a great guest for us.
Oh man, perfect, man, perfect. Woo! This is exciting. This is exciting. So
Absolutely.
Thank you so much for explaining this, Anthony. You did a great job again,
folks.
Thank you. If you have any questions, we've got the link. Okay, it's right there. Go ahead and click on it.
Yep.
Don't be afraid. You can click on it right now, or guess what? You can click right here. That's right. It should be right here, and you should have actually saw it throughout the video as well. Please click on that link. We are here to help you. Just let us know what you need, and we'll go ahead and give you Anthony or his team, because the First-Lien HELOC is something that perhaps you haven't heard about, right? Perhaps you may be new to it and need to learn more about it. Don't hesitate. We got it. Okay.
On top of that, real quick.
Yes.
If you notice this structure, what's the first step? what's the first thing that you use? The first thing you use in this structure is a first-lien HELOC, right? Remember that, right? If you want to do this, if you want to implement this strategy, the first part of it is to get a first-lien HELOC. So if you already understand this strategy, or if you understand infinite banking, right, you can make it much easier and much more effective, right, if you introduce a first-lien HELOC to your cycle. So I wanted to name that because maybe there are people out there that understand infinite banking, but haven't thought or heard or seen anyone that has leveraged it with a first-lien HELOC and velocity banking too.
Right.
Obviously, again, we're on the velocity channel, so the first-lien HELOC is going to be the first part. But in this cycle, if you're going to use this method or if you're going to use this strategy, it has to be, because that's what you pull from. So if you're already doing infinite banking and want to implement this strategy or learn more about that, click on the link below too, right? Because that could be something that you could enhance what you've already got and have your money work for you even more effectively and more efficiently than you already are.
Awesome. Awesome. Wow. Well said. Well, look, we'll just end with that. Thank you so much,
Thank
guys,
you.
for watching. I know it was educational. It was like fire hose right at you. So, like I said, go ahead and click on the button here or the button there, and we'll go ahead and talk to you soon. All right, guys. Thank you so much.
Thank
God
you.
bless.
Goodbye.